Good evening, everyone, and welcome to the webinar today on 2024 key events to watch and investment opportunities. My name is Yogesh, and I will take you through this session today where we are going to discuss about the important events which we have to see in 2024 and what are the sectors we can look into for investments and what will do a brief recap of how 2023 has been. And before I start, I see a few more people joining in. So we'll just wait for probably 2 more minutes before we start this session. So thank you so much for your patience. So once again, everyone, thank you so much for waiting, and I think everybody else has joined. I think there will be a few more people they will be joining in, but then let's begin the session. And please, if you can see my screen, if you can hear me properly, try to use your chat options to write a yes or a okay, so I'll get an idea, and you can ask live questions also using that chat option. And just in case, if you're not able to sit throughout the webinar, a copy of this session will be put on YouTube, and you can later review it. The idea we do these sessions live is that if you have any questions right away, you can ask, and I'll be able to. I'll try to reply it while we are in this session. So coming back to begin with, how 2023 has been in terms of a financial landscape, because this is something which is really important. We're going to talk about a few trends which have been emerging from a while now, and most likely they will become the key trends, and it will design our investment strategies. But just to have a proper refresher of what has happened in 2023, like as the world navigates through the complexities of a post-pandemic world. So we saw in currently in 2024 now, as we are approaching, it's going to be a very critical phase. And if we look into the economic development, if we look into the economic growth, a lot of analysts are expecting that it's going to be very moderate as compared to the rebound which we saw post COVID. And again, that there are very encouraging signs of resilience. There are technological advancements happening, which are basically consumer evolving consumer trends also. And again, there is an ongoing pursuit, I should say, of sustainable practices which have also increased. So there are a lot of dynamic forces where investors will be tiptoeing in the financial markets. And we're going to be discussing that how the market climate would look in 2024. So, as I said, in 2023, what we witnessed, the US markets mostly experienced a period of a very high inflation. I would say notable fluctuation, actually, not inflation, but more of a fluctuation in inflation. And in 2023, the stock markets also saw a lot of fluctuation, and there was a lot of movement, there was a lot of volatility. And again, we saw a lot of stock markets ups and downs, and there was a lot of uncertainty because uh, inflation continued to come down. But then when the data came, we saw that there has been a noticeable rise also. And currently, where we see interest rate hikes, geopolitical tensions, there have been war situations, there have been rate hikes. And despite these challenges, still, I would say the stock markets have still demonstrated a resilience, and it looks like the year will close with positive results. Now, coming to the inflation part, the Federal Reserve's decision to raise rates four times in 2023. So, if you see since the beginning of 2022, central bank has increased interest rates. There is a question: will you focus on India or the globe? So, we'll definitely take outlook on Indian markets also. The idea of the session is to have a global outlook, because at the end of the day, we also encourage investors to diversify. So we'll take an idea on Indian markets as well. That what is the expectation out of the Indian stocks as well? If that's the focus, definitely why not? But we'll also cover the global markets as well mostly. Now here, as I said, the Federal Reserve, they have increased interest rates around 11 times since the beginning of 2022. And if you see in 2023, it has been at least four times when the interest rates have gone up. Now, the Federal Reserve, if they continue to raise rates, basically their target is to bring inflation to 2%. For that, I think uh, why central bank increases or decreases rates. And just to give idea to those investors who are not much involved in the markets, when central bank of US, when they increase the interest rates, and when I say interest rates, that means the cost of borrowing, it basically makes borrowing money more expensive for people and for businesses also. And that's how the Fed basically controls that interest rate at which banks could lend money to each other overnight. And when the central bank increases that rates, bank would charge higher interest rates to the people who want to borrow money. Now, what happens? This slows down the economic growth. It reduces the consumer spending also, because now people cannot borrow money at a cheaper cost. So they reduce down their borrowings. And people see, investors, they see that there's a reduction in the valuation of a lot of stocks because the spending decreases. And as investors weigh the value of a company's stock on a very future earnings, on the expected future earnings of the company. Now, what has happened is throughout this, we have seen central bank increasing rates. Normally, stock market would go down during this time, and it did in the beginning of 2022. But then we have seen a recovery in the stocks, and by the end of the year, we are expecting that the returns are still going to be positive as compared to the previous year for stock market indices, and that's important. So now the fact is that what are the events first we have to watch in 2024, because this is really important. uh, our investments are going to be affected by the geopolitical tensions, and this is just one of the factors which we have to watch. And I'll also try to take you through to the live price charts of a few commodities and indices, and we'll see that how these kind of trends, or sorry, how these kind of events have actually impacted the prices of commodities and indices. So geopolitical tensions, as we see the first slide, this year specifically saw heightened geopolitical tensions. And you talk about the ongoing conflict in Ukraine, or the strained relationship between US and China, China and Taiwan, for example, and these situations currently, which is going on with the Israel and Hamas. This has disrupted the energy markets completely. So we have seen oil prices going higher. It has also impacted the global trade. It has raised concerns about that, is the supply chain going to be stable? So this is really, really important, right? Because we have seen there has been a lot of energy crisis. We have seen oil prices going up. We saw nat gas prices going up. And as you see in the slide where I mentioned, a lot of strategists, they're expecting an increasingly fraught geopolitical backdrop and greater divergence across key regions, compounding uncertainty. China's geopolitical tensions, as I said, that the tensions with the West over and the competition and Taiwan, this is something which is going to be very crucial this year. So if you are thinking about investing in Chinese markets also, be careful, because at this point Chinese markets are very undervalued. We saw Chinese stocks going down when China reopened from quarantine. We expected that uh, there will be a surge of demand from Chinese investors, but the opening was very disappointing, and we have seen China going through deflation, and the interest rates in China are still at the lowest because they were under quarantine for a long time. So there are few things which we have to see before we start investing into these markets. There's a lot of geopolitical tensions this year as well, and this is something, again, as I said, while you are choosing your investments, of course we all think about diversifying, and at the end of the day, there are a lot of factors which are going to impact on the diversification of the portfolio. This is going to be one of those factors, which is the geopolitical tensions. Talk about Russia, Ukraine, talk about Israel, Hamas, we talk about Chinese tensions with US, China's tension with Taiwan over semiconductors. I mean, there is a lot of friction over there. Now, next question, which next event, which we definitely should keep in our calendars, about the central bank. Will the Fed cut rates in 2024? Because this is something which is really important. This is going to decide a lot of movement for gold, for dollar, for stocks, because the Federal Reserve's monetary policy tightening, or as we say, that is Fed going to continue to increase rates or stop raising rates or cut down the interest rates? Now, if they go very aggressive, because throughout 2023 they were really aggressive, right? And they have already raised 4 times in 2023, 11 times since the beginning of 2022. So we have to see that what is the central bank expectation. Are they going to be increasing the rates? Are they going to be keeping the rates as they are? Because if the loans become more expensive, then it might impact stocks. But if loans become cheaper, which means if Fed, instead of increasing rates, start reducing rates, thinking that the inflation is under control and now they can continue to keep the interest rates same, that could push stock markets also. So it's really important of what is going to happen to US stock markets or stock markets globally. Somebody just pointed out about Indian markets. See, eventually, a lot of times we have seen, uh, since we are on the topic about Indian markets also. See, India's growth momentum is expected to carry it to the top three global economies in size, and before the end of the decade, basically, if India is actually able to capitalize on these transformative initiatives. So Indian stocks currently are expensive, but they are already pricing very high in expectations. So as a investor, you should still continue to hold a very broad mix of emerging markets. So, of course, there will be a meaningful exposure to India's growth, but then diversification will definitely help you to insulate from any kind of risk also, right? Because emerging market is something which is really important. I mean, anytime I would always want India in my portfolio, because Indians' growth initiatives, demographics, they have helped the economy continue to advance. Stocks currently the stock seems to be very priced in high expectations because it's the world's fifth largest economy. And I think, as I said, the relevance of the Indian markets currently is rising because now it's the world's fifth biggest. It recently surpassed the UK. India's GDP is expected by economists to grow, I think, faster than 6%. And there's going to be each in the next 3 years compared to US, which is expected to grow less than 2%. So even the IMF, if I remember, they have forecasted India to be the third largest economy by the end of the decade. And that will mean that India might overtake Japan and Germany. Population is also another factor which is surpassing China this year. So again, as I said, it has become the most populous country, world largest democracy. It's a capitalist economy. Modi being the prime minister is one of the most world's popular leader. Now the momentum is very positive. India is making a lot of changes to increase its attractiveness as a manufacturing base. So it's basically India is known for IT outsourcing, but normally this IT sector only employs a very small fraction of the workforce. And due to the pandemic, this supply chain is actually heightened now. So if you see INR also, the Indian currency, it has become really less volatile because earlier, if you remember in 2008, the volatility between USD and INR was a lot, but now the volatility is less. And it is expected that India is benefiting from cheap energy and it has become a very critical manufacturing input because now they have started purchasing Russian oil, right? And that is really important because now the current that's why the Indian currency has become really less volatile after they have started purchasing Russian oil. Now, so this is basically very popular news, but why we need to diversify? That is the really important part because diversification from one market. So while we see the positives of one market, there are certain risks also. uh, I just talked about how India can become a manufacturing powerhouse, but it's not going to be really easy because the productivity of the labor is still very low. There's a lot of mismatch between the labor skills, and the consistency with which the quality goods are being manufactured, that is also very inconsistent. Infrastructure still very poor as compared to a lot of countries, right? China's government takes really quick, really decisive action when it comes to taking any decision regarding this infrastructure. India takes a lot of time. There is also a lot of climate change related threat on India's growth because temperatures in India are soaring high and the heat waves have been moving across the country. And the if you see, the World Bank has actually flagged India, it's going to be one of the first places in the world where heat waves are going to breach the human survivability threshold. So that's like the most important risk which we are facing currently. And as I said, the stocks as of now are typically expensive at this point of time. It's a very every emerging market portfolio needs India, but currently the stocks are slightly expensive. Yes, there is, as we say, the longer term average, if we see, the premium is slightly large, but then again, that is something which we say that Indian stocks are currently trading at a premium. But the growth momentum will carry the economies even further for the next decade. And this will happen if they are really able to capitalize on their initiatives. So this is something which I would like to put the Indian investors in perspective, since the question was asked in the beginning. That's why I'm just highlighting it out. While we see the central bank interest rates also, we have to check that if interest rates continue to be same or cut down, we might see stocks going higher. And if the interest rates are increased or any aggressive interest rate policy, we might see stock prices coming down, dollar getting more stronger. So I think central bank interest rates you should definitely keep a check on. And please continue to ask questions while we are in the middle of the session. That is only going to help spark a discussion also. Since it's a webinar, I'm sure everybody's going to get bored really while I'm talking. So please ask more and more questions and I'll be able to answer while we are doing this live. Another event, one of the very talked about is IPOs, which we are going to watch in the year ahead. And IPO is something like if we see after the pandemic, when the inflation was too high, we saw a decline in the IPOs coming in, especially in the tech IPOs, because the tech sector was going down. So a lot of um, we saw very restricted participation from a lot of companies regarding IPOs. But now, so to give you an idea, in 2023, uh, IPO market in 2023 has overall been mostly muted. We did not see too many IPOs in 2023. Very few deals and proceeds raised than the previous years. But now, like a lot of analysts now, they're seeing very potential signs of improvement, because a lot of activity has picked up in the last quarter, and there are a lot of high profile deals in the pipeline sector coming in. So around, I think, 968 IPOs globally in the first 3 quarters of 2023 raised around $100 billion capital. Now, this was again lower than before, but now the US IPO market, it has not shown a very positive sign in 2023. What's going to be in 2024 is the most important part. That what's the landscape going to be like? Because IPOs in 2023 very uninspiring. Now, if we see 2024, we have seen a lot of optimism in the IPO market. But again, as I said, the volatility, fluctuations, investors have to be very careful. They have to diversify across all the sectors, because the IPO outlook is still going to be very mixed. There are improved conditions which we see. There is a lot of increase in demand for the tech stocks, because tech stocks in 2023 were down all the way, but in 2023 we have seen increase in the tech area, right? So there are some factors. Again, we talk about geopolitical uncertainty, we talk about inflation, interest rates. They are going to be key areas which will decide that whether the IPOs will increase or not. But to talk about the sectors, that why which are the sort of sectors that can actually become important during the IPOs. We are going to talk about fintech, for example. There are companies like Stripe, which is a global tech company, and that specialize in online payments. So Stripe is going to go for IPO. There is a company called Klarna, which is again a fintech Swedish company, and that is also going to be going for the IPO. It was founded in 2005. It has become a very, very major player in e-commerce space. So there's Stripe, there is Klarna, and then there is the area of cybersecurity. So companies like Armis, which is a cybersecurity company, and it provides asset inventory and security monitoring control. So Armis is also going to go for IPO. There is Nike, which is basically focused on providing solutions for open source code. So within cybersecurity, there will be companies which will go for IPO. Within digital assets, we will see OpenSea, which is an NFT marketplace company, that will also go for IPO. Circle, which is a fintech company again. Within artificial intelligence, OpenAI, the Chat GPT company, is also going to go for IPO. And Dataiku, which is a software and an AI company, which is basically very specializing in collaborative data, will also be going for the IPO. And there are a lot of other companies. I don't know if you have really heard about Reddit. Reddit is an online community, and that will also be going for the IPO. And that's why these are the few areas, these are the few companies which you should definitely keep a check on. And we will see a lot of these sectors, especially fintech, cybersecurity, and digital assets. These two, three areas are really, really going to be high. Even in India, there are going to be IPOs after elections. At least 9 new age tech startups are readying offerings, preparing to tap the markets after next year elections. In even in Gulf, there is going to be a IPO momentum which is going to continue in 2024. We have seen that how UAE has been very upfront and been doing a lot of IPOs past year. So 2024 is going to be, I think, a lot of IPOs are going to be coming in. So you can definitely diversify your portfolio within that. See, needless to say, IPOs carry a risk element, because when you get into pre-IPOs and when you buy these companies, you are basically just doing your own research and trying to take a decision on the basis of how the company has gone. But you have to have that risk element considered here, because these are new companies to be listed. They have been in existence for a while, but in the stock market, how these IPOs will go, that only the day of the trading will decide. So when you try to buy these IPOs, be careful. The risk element is something which is really important. You definitely have to understand. So in India, in Gulf, in US based companies, please ask us, talk to us, and we'll definitely help you out how to trade during the first day of the IPO, and how you can do it using the platforms as well. Next event, one of the most important events, elections, which is going to be in 2024, US elections for the president. And this event, every 4 years, we have seen markets getting more and more volatile. We see the market is always chaotic. We see a lot of volatility in gold, stocks, oil, currencies, and I'm sure a lot of you must have seen US elections before, and the movement which it brings across the financial market. So this is going to be that year. US election is actually going to be one of the most important event, and we have to understand that currently, as of now, the election cycle, because the outcome of the 2024 presidential election, it could have a really significant impact on the US stock markets, because a lot of stock indices, they fluctuate a lot on election days. And it's very simple. Currently there's a Democrat government in US, so the policies are different. There are different candidates with different policies which are related to corporate taxes, which are related to regulation on technology companies, trade agreements, and that could have a ripple effect on stock prices as well. So that's why I think US elections are going to be very important this year. So 2024 is going to be a very eventful year, by the way. We are talking about IPOs, we are talking about central bank interest rate decisions, we are talking about elections, right? And most importantly, we are also going to be talking about how we're going to future proof the investments, because the trends have continued to be talked about. Companies like Nvidia, companies like Indigo, companies like Tesla or ChargePoint, Ultragenyx Pharmaceuticals, Cytokinetics, Okta, Zscaler, a lot of companies related to AI, robotics, fintech, digital security, sustainable energy. Um, Investors have flooded towards a lot of these companies, and now it's time that as an investor you try to future proof your investment, because earlier there was a notion that if we invest into a company which is based on renewable energy or sustainable energy, it may be good for investor ethics, but not a good investment, because it increases the cost of the company and leads to lower profits. But it's not the same anymore. Now these kind of companies, whether you invest in, generate equal amount of returns as compared to any other company. So now is the time when people are more aware, they are more I should say concerned about the environment also, and that's why a lot of investors are inclining towards future proofing their investments by investing into these kind of areas. So you talk about AI and robotics, there are a lot of historical trends. And so if we see back sorry, in 2022 and 2023, 2022 tech stocks actually fell, but in 2023 we saw a rise in the technology companies, and especially which were concerned with artificial intelligence. Companies like Nvidia have skyrocketed. A $150 stock 1.5 years ago is currently $505. We talk about fintech and digital security. As I said, cyber security and digital payment, it's increasing. There are a lot of IPOs coming in this year also. So this is definitely an area to look at. Electric vehicles and driving technology, by 2040, EVs are expected to account for 75% of the market. So there are a lot of companies which are related to electric vehicles industry, companies which manufacture electric vehicle charging stations, which package EV batteries, which also recycle EV batteries. So there are a lot of, and let's not forget, China is one of those economies which excel in the EV market. The largest manufacturer and exporter of electric vehicle companies is China. So there are companies like Li Auto, Xpeng, Neo, the stock prices of which have come down a lot and I think that is something which you should definitely keep a check on. Again, as I said, EV is a very risky area, because, and not just EV, whether we talk about DNA sequencing, AI, robotics, but these are futuristic sectors. So don't expect that I'm going to buy the stock now and by the end of the year I will see phenomenal growth. Maybe you have to hold on to these companies for 5 or 6 years until that trend becomes something. But this is what the future is like. So maybe not a very large portion of your savings could be invested, just a slice of your savings could be, and that may not be a very big slice, because you continue to diversify between your stocks and between your bonds. Within stocks you get some dividend stocks, fixed income stocks, and then a part of that could be invested into the futuristic companies also. But it definitely should be, because now the world is changing real fast and the technological advancements are catching up, and I think this is here to stay for some time, and in the next few years it's definitely going to escalate. There's a question here: what sectors do you see as most promising sectors in 2024? So we are going to answer this question. We are definitely going to answer this question by the end of the presentation, because that's one of the questions which we definitely have to talk about. That there are a lot of companies, this food and beverage, technology, telecom. So which are the sectors which we are definitely going to see? So this is going to be my last slide, and we are definitely going to talk about this as well. Now, coming to the idea, looking at the bigger picture, uh, the stocks versus bonds in 2024, where actually to invest. And as I say, that we always have to have a diversified portfolio, and we have to understand that diversification is really, really important. So stocks are basically companies you are trying to invest in, right? So at the moment, if I were to invest into Coca-Cola, and Coca-Cola is $50 per share, if I buy 100 shares of Coca-Cola, I'm investing $5,000 in Coca-Cola, right? This is exactly how investments work. Bonds, on the other hand, if we see, bonds are basically fixed income instruments. It's more like a loan setup, where you definitely give. So what you do is you lend money to a borrower, and in return you get a fixed interest, which the borrower pays you, and at the end of a stipulated time period you get your capital back. So with compared to bonds and stocks, bonds is a less riskier investment. Stock is slightly higher risk, and that's why the returns are normally higher in stocks as compared to bonds, right? Now the question which everybody has in mind, that is, stock at this point of time a better investment than bonds, or is bond going to be a better investment than stock? And this is a very important thing, because at the end of the day, first thing, it is decided by your risk appetite. If you are an investor who's closer to the retirement and has no other source of income, you should be more inclined towards bonds, because bonds are giving around 5%, right? 5% investment here. And as I said, the best way to navigate between the stocks and bonds is to decide if, what's your risk appetite. Stocks are slightly higher risk than bonds, but they offer higher returns. The most important thing which you must see is that what is exactly the market risk premium. So when you switch from bonds to stocks, your risk increases, right? But also your return increases. Now, if there was a way to find out that what is that premium which we receive, right? What is that extra return, or what is that extra premium which one person receives when they actually move from bonds towards stocks? And that is called the equity risk premium. So in a concept of wealth, we should always focus on the idea that if I'm leaving this asset and not investing into this asset, and I'm investing into a different one, so is the return which I'll be getting in the next asset, is it going to be worth it, right? It's just like a typical understanding. If I'm investing into a stock of Amazon, so I know that Amazon moves a lot, right? But at the same time, if I'm investing into a bond where I'm getting a fixed income, so if I invest in a bond, I'll get a fixed income, but I invest in Amazon, I will not get a fixed income, but I can get a very high return. But then at the same time, the Amazon as a stock, it moves a lot also. So am I ready to face that kind of volatility in my portfolio? That's basically a question. And that's why we study the equity risk premium always. And we try to understand that if we were to switch from one asset class to other, will we be able to earn enough in that asset class? Now, currently, what has been witnessed is in last 20 years, that risk premium which investors were able to get, that has reduced, which means there is very less motivation for the investors to switch from bonds towards stocks. And that is one of the primary reasons that why a lot of investors are actually preferring investment in bonds also. But of course, we always have to be diversifying our portfolio. So that's the most important thing. We have to understand that diversification is always needed in our portfolios. So currently what is going to happen is, as an investor, we have to understand that next year probably central bank is going to keep the rates same, so we might see a push in stocks. But also at the same time, bonds are continuing to give us fixed income, so we'll definitely should have a higher percentage of bonds as compared to stocks. The price of bonds are currently down. A lot of investors are buying more and more bonds and holding on to it, because if the interest rate comes down, prices will shoot higher. So currently I feel that a larger portion of bonds should be in your portfolio, followed by another portion of stocks as well, but more weightage should be given to bonds at the moment. But that being said, it depends on your investment objective also, because US aggregate bonds, as you can see, that should deliver 5+% returns over the next 10 to 15 years with just a quarter of the volatility of the large cap stocks. So as we see that currently bond is one of the most favorable instruments, but depends on how much risk you are willing to take and how much returns you are looking for. Now, before we move on to the last slide and to the last few questions, let's see the bigger picture in the commodities, which could take off in 2024, because this is something which is really important. Markets have adjusted to the war in Ukraine. For much of 2023, commodity markets, Russia's invasion of Ukraine, uh, this disrupted the supply. And when Russia-Ukraine war happened, the world was just got out of the pandemic. So the supply chain issues were still there. And that was the reason that why the prices of raw materials went up in 2022. It also brought a lot of inflation. But now, if we see the economic outlook, this entire market, there is a lot of excitement in 2023 has come, because oil prices have bounced back. But at the same time, there are still worries about demand that are keeping the stock markets down. Now, in 2024, supply problems together with the demand, it could cause at least three commodities to take off. First is crude oil. So most of the analysts, they are talking about a new supply will combine with the slow economic growth to cause a gradual decline in the price from more than $90, right? So this is something which we saw in September 2023, that from 90 it went down to $80 during, like, let's say currently which we see is around 80 to 83, and by 2024 maybe around the same level. But imagine when this happens, that could prompt Saudi Arabia, which is the world's biggest producer, and they might announce more output reductions, because they've already done this year, and they might announce more output reductions than 1 million barrel per day. And that is going to be equivalent to 1% of the global demand. Iran's production is still dented by the sanctions shipping problems, so that is also expected to fuel up the oil prices higher. So I feel that oil prices, a lot of analysts, the way they see that, with the prices being around 80 to 82, 2024 could be the year where oil prices will continue to increase, and that may happen due to Saudi output cuts. If we talk about metals also, gold prices, we have seen gold prices skyrocketing high, and due to the geopolitical tensions which will continue in 2024, if gold prices go up from to 202100, I think there has to be a positive trend for gold for 2024 as well. There could be minor corrections, but I think gold has crossed the levels of 1800, 1900, and would still be very, very fluctuating and very volatile. Metal markets are also, by the way, very vulnerable, because if you talk about cobalt, you talk about lithium, these two metals are, they were on everyone's radar in 2022 because the supply was enough. If you see copper prices, for example, in 2023, copper prices fell because Chinese growth suffered a lot. Uh, the hottest of all metal markets could be the ultra niche one, and that could be uranium. Because uh, if you see the search for steady sources of low carbon power and the war in Ukraine, they have made governments hungrier for atomic energy, and conflicts have actually disrupted the uranium production also. So the prices for uranium, already they are higher for the decade, could rise even further. And lastly, if you see from the agricultural commodities market, Russia's invasion of Ukraine, uh, it did not jolt the market for long. But if you see wheat prices, it almost, which was $12 a bushel in March, it hit $5 in 2023. Basically went down. But then Ukraine, which is the world fifth biggest exporter of the grain, now it's exporting 35% less. So bumper crops from Russia have actually made up the difference. But the weather is actually getting affected, and there are a lot of escalating tensions between both the countries. So there is a possibility that wheat prices also will be impacted and might bounce back. So within agricultural commodities, within metals, within energy, these will be the few areas which you should definitely keep a check on. And lastly, the questions which are being asked, any specific sectors expected to outperform in 2024, or investors, what they should be cautious in 2024 about. Now, this is really important. Are there any specific sectors in 2024 which we should look out at? Because at the end of the day, there are a lot of sectors which we see, but any specific sector. So based on a very average estimate by when we talk to the analyst, the real estate sector has the most potential upside over the next 12 months. And apart from real estate, we are going to also be checking the consumer discretionary, the luxury market. It's going very close to the real estate also. Energy sector is still expected the lowest upside, expected upside. But just because energy sector may take a breather in 2024 doesn't mean that anybody is bearish on oil companies, because these are like really long term investments. And currently also, as I said, the energy sector is has the highest percentage of buy ratings from the analysts. So oil companies are still a very good avenue to look into. Then there is again consumer staples, which means basically defensive stocks. But the top three sectors, if I were to see, first is real estate companies, and followed by luxury stocks, followed by energy companies. The high flying tech sector, basically the tech sector, is also likely to get a lot of attention from investors, because if we are talking about valuations also, the tech sector saw a lot of decline in 2022, and 2023 there has been a modest growth. So as of now, if we see the financial ratios also, it looks very attractive for the tech prices to go up. I think these are the few sectors which are really going to be mostly important for 2024. So it's real estate, the luxury stocks, followed by the energy stocks as well. Also, there are few questions. So basically, what we should be cautious about in 2024. So if I say as an investor also, the biggest risk is the elevated inflation, because if central bank is not able to control inflation, and if inflation starts going up again in 2024, and if there is a further rate hike happens, and further tightening of monetary policy happens, it might bring again a slower economic growth. and can put US into recession. Now there is a US elections we are looking forward to. There are other geopolitical risk also. There's a dispute between China and Taiwan that could also rattle stock markets. So I think few things you have to be very cautious about 2024 is the Fed Reserve, the inflation stand, the geopolitical tensions, the war situations. I think those are the ones which could really rattle down the stock markets. Should be definitely keeping a check on. Will 2024 be a good year for the stock market? As I said, if we are looking at the current sectors also, it's really difficult to predict how the stock market will perform on a year-to-year basis. But then a lot of analysts are generally very optimistic about the outlook for 2024 because the average price target for S&P 500 is 5,100, which is 15% above the current market levels. So yes, it is expected that the next year market probably gain around 14 to 15%. I think this is something which is going to be really important. I think there's a question right now. Somebody just asked about what should be the investment strategy in 2024. See, I think every investor's portfolio is like very unique. Your goal is different, your risk is different, your investment horizon is different. So normally what happens is a lot of economists generally expect a climate of falling inflation, a slow economic growth, a loose policy, which is going to be in 2024. Uh, there is, as I said, real estate and luxury sector is going to be one of the most watched sectors. So try to be more inclined toward that. But that being said, we are going to see all other avenues also of investment, and there are going to be a lot of strategies which you can definitely look into. I'm just going to really quickly share something with you right now, and this is going to be mostly about so for those people who are interested in understanding stock versus bonds, look at these US Treasury bills at the moment. US Treasury bills basically are those bonds which have a maturity of up to 1 year. But then this particular portfolio includes bonds with 1 year maturity, 2 years, 5 years, and 10 years maturity also. And if you see their yield is around 5%, 4%, and this is much better than a fixed deposit currently, which you're doing at the moment. So I think try to see a proper risk reward perspective, because next year it's going to be a very eventful year. And when I say the eventful year, that means, of course, there will be a lot of volatility, there will be a lot of unexpected movement, and diversification is the key. So while you put your money in the bank, it is always better that you buy these US Treasury bills, which are giving you around 4 to 5% yield, and try to capitalize on that. Right. So I think that is something which I wanted to highlight. We are going to have more sessions on this, and we are going to go much more in detail. Obviously, there are a lot of portfolios which we can create around these strategies, and that's why I would definitely suggest. Somebody just asked that if we can have a one-on-one session to focus more. Definitely, I'm available for a one-on-one session as well, and this is applicable to everyone. Anybody who has attended the webinar today, if you want to have a one-on-one session, understand more about the areas of investment 2024, more than happy to sit one on one. We have our office in Imar Square. You can always come here for a cup of coffee and we can sit together and discuss. Or if Zoom or Microsoft Team, any mode of communication is important, whichever you like, we can definitely have a one on one session and I can talk more about these strategies and we can discuss more. At the end of the day, every investor will have their own risk appetite, but I can give you a lot of options that you can pick depending on your risks and understanding. Century as a company, we're investment consultants. We also teach a lot of clients how to invest, and this is something which we have been doing for the longest time, more than 35 years around now, and aware, making people aware about financial markets and the current market trends is something which you're very dedicated to. So that's from my end. And if you have any further questions, I'll be more than happy to answer. I hope that I've covered most of the basic topics. But then, as I said, if you want to dig deeper, much into, want to see more strategies, what we have, other portfolios as well, and how 2024 is going to shape up, like, please have a one-on-one conversation with us. And this is something which is free of cost for anybody who has attended this webinar. So I'll definitely be available for a one-on-one session, and we'll show you a lot of portfolios and strategies which you have built. So once again, thank you so much. My name is Yogesh. I'll see you next week with a different topic, and definitely we are going to talk about markets more. And please continue to join these sessions. You can review us on Google as well, Century Financial. If you like this session, or if you didn't like this session, please give us a feedback, and we'll definitely work on it. This is something which we do, and consistent reviews really helps us, to continue these sessions week on week. So thank you so much. We'll see you next week with a different topic. Till then, have a good night, trade safe, invest safe.